The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and let me just show you a couple of things here just very quickly because this fits exactly appropriately into what we're looking at in the bigger picture. This is a 2-minute chart of the E-mini. This is the June contract. You'll see that we made a little high right here around about the 21s earlier on, around about 8:30, 9 o'clock, then pulled back to a trough right there at 2808.50. That was a trough D. It was G/C. That should have been a D. Let me put that in here. Then started a new move up. Didn't know that it would be an up arrow until it really went on for until about 10:40. And then all of a sudden you're going peak A, peak B, peaks. Then inside, this is exactly what we were talking about the other day with Greg, how you've got to count the inside peaks as well as the troughs. Look, then you saw a brand new one underneath that peak B. You go A, B, C. Suddenly goes to a D, pulls back, and then you can draw a trend line plus the cup formation and a second cup formation, which takes you to this very minute right now, which should be hitting the 2818 area, 2820 area. Well, we've made a peak E in the 2-minute chart and started pulling back. Now we can go to the 5-minute, and you'll see in the 5-minute we've only made a peak C, but it's underneath the previous peak D. That was that high. It was made at 8:30 in this 5-minute E-mini chart, a June E-mini chart. There still should be another pop to the upside by 12:30. Should try to get above 2820.75. That'll give you your peak D. That'll complete the cup formation. And then we might start to have another cup formation. This is a big breakout to the upside. That would coincide with the 10-minute, which shouldn't do it in this 10-minute bar. It should wait until, what's the time? It's 12:08. It's got another 2 minutes to go. Then the 11th minute can start to move up, and that'll go to a D as well. So that's the way I like to look at it, using cup formation, using the left side, right side price time match to various plumb lines. And what's really important is that in this particular case, the first plumb line, the 5-minute chart, went exactly to that peak B, right in the Chapman wave inside wedge target resistance line. I usually say the green on the way up, right there. Oops, that's not yet, it's yellow. Now I can't even find it. Let's just see if I can make that green, whatever it is. Yep, there it is. Okay, all right, we'll get back to that. Now, the reason why I want to spend a moment on that is, look, the dollar made this cup formation and then broke out. If it was a Chapman wave cup and ladle breakout, that would not be a G, that would have been a C. There would have been just a minor pullback to the starting point of 97.37, somewhere in the 30s, and then, boom, it would go to a leg D. This was a deeper decline. Also, gold had a sharper rally. Now, what's very important about this is that the weekly chart in the dollar is still consolidating sideways. The monthly chart is just really held very well. Hasn't broken to the upside, but it hasn't broken to the downside. That'll occur on a close. Well, does it have to be a monthly close? Let's just say weekly close under 95, and it's at 96.74. And right now, it's going to be very interesting what happens here in the dollar index. Okay, now a couple of things that I'm looking at here is I want to get to a couple of the questions because it all relates to what I'm looking at in the market. I also wanted to give it a couple of more minutes to see if we're going to go to that leg D in the 5 and 10-minute chart. So we had a question about Roku. Every once in a while I get some emails from people either with options or whatever it is. And the question is on Roku, what's the analysis? Well, first of all, the monthly low, the IPO price was 15.78. Pops to 29.80, goes down to 15.70, no, it's the other way around, goes to 15.75, pops up to 29.80, 100% gain. And then what happens is it has a spike, goes to peak A, peak B, has a high of 74.35 back in the 12th of March, then plummets, literally plummets down to the 23s. Now it's rocketed back to the 70 area, 70, so no, it wasn't 74, that was 77.57 in October of 2018. The last rally was 74.35 on the 12th of March. Now it's pulled back. Question, is this a short? What would I be looking for as a short? And is this maybe a long? What would you do? So this is the answer to the question is that the price has to tell me from here. We've missed an opportunity to short. And I'm not sure I would have shorted, but it gapped down. Maybe it was earnings news. I don't know. Whatever it is, yesterday was a sharp decline, had a high of 69.72 and a low of 60.13. This kind of goes to the market, all these different arch formations, V formations, going back to previous levels. This is really important. So I've got a bunch of questions holding. I'll get to those questions. I just want to do this because the person who asked it went through a great deal of technical analysis based on their own work, plus my Chapman wave methodology. This is a leg C, trough C to the downside in the 120-minute chart. I'm thinking that Roku, based on the weekly chart, has made a double top, but is also very close to the 60 at 61.34 right now, very close to the 57, 55 area that might be where you see new buying. So how can I put this? Let's see. I just want to make it as succinct as possible. Okay, here we go. Question number one is, what about the 120-minute chart? Well, the 120-minute chart has key support at about 57.30, around about 57.5. So that's 4 points. That's a big deal. If you want to short 4 points in a stock like this for a quick trade, that's quite something. JB in the Den says it would appear it was an analyst downgrade that took Roku down. So Roku, what's the full title of Roku? Roku is called Roku Inc. A shares. Now that explains. This is the streaming box that you can use. What I'm going to do now is to say this is the candle of most importance, the candle of the 22nd of February. And because you've made your peak E, the MACD is bad, the stochastic's at 71% weak, it's way under all the moving averages of importance. The 50-period moving average of 55 corresponds almost to the low of the bar of the 22nd. This is what I'm going to say. And shorting it right, I would prefer to use an option right now as a put, but I'd also be thinking about a call. So on a very short-term basis, we've got tomorrow's option expiration, so that's out. You have to go to April. To me, that's going to be much bigger premium than I would like. So I'm going to go back to saying the stock. If this stock is able in the next 2 days to rally towards the 9-period moving average of 60, around about 65, let's say 63.5 to 64.5. I'm not sure it's getting to 65 just yet. And then starts to pull back, that's when I would look at it as a short, and I would put my stop about 35 cents above whatever this arch high is in the 120-minute chart. Why? Because the MACD and stochastic are poor enough. The stochastic and MACD in the 120-minute chart are in bounce area, but still very weak. So I'd be looking at that, and I would then say that would be the first scenario. I'm going to try to get to the second scenario later. I just have so many questions and calls. Let me just get to the other stuff. I'll come back. Meantime, it is bearish at the moment on Roku, but the weekly chart is bullish. I'll try to compromise and work it out. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So just want to remind you, what we were looking at in the 2-minute chart is because I'm talking about patterns that are repeating in all time frames. So yeah, and the reason why I want you to do, as I said, I'll get back in a moment to Roku, but Doku, D-O-C-U, Docu is DocuSigns Inc. We spoke about it yesterday. I think I said it's acting very well. I didn't realize earnings were today, this afternoon. Question in the den was, will you take some off here in Docu? In other words, someone's got this and earnings coming out. So this is the reason why I want you to do this. You see, I call this a leg E, but the pop today goes to a leg F/B. The MACD is just about across positive. The stochastic is at 87%. That's a little different to, let me just show you. And the reason why I'm doing this today is, look, the Dow has only gone to this leg, gray leg A, with lousy technicals. The QQQ NDX 100. NDX 100 trading vehicle, Invesco QQQ Trust Series, that has your leg E. The MACD is just about across positive, but it could also deflect down quite easily, and the stochastic has just gone to 83%. We're looking at each one of these things having a different connotation. If this is an E/A, and I'll put that in because we don't know yet whether it's going to recycle to the upside, because the technicals have just, as we speak, improved a little bit to be able to say, well, MACD has now just crossed 0.03 positive. Hey, I like that. I like MACD crossing positive. Not if it's going to deflect lower, and earnings coming out. So here's my answer to the person in the den. You got Docu, and this has, keep your eye on the left side chart. And if you're able to look at the two charts, the left side is daily and the weekly in the middle, keep your eye on that. Now watch this. This is a much stronger chart. This is Docu, and look at the 9-period moving average. It barely touched the 14 on the pullback. It just keeps closing over the 9. This is a very powerful move. I'm suggesting to you that if there's any positive at all in Docu without any caveat, without any little asterisk, without any in the conference call, some kind of outlook negativity, this thing is ready at 58.86 to pop 4 or 5 points. But because we know that in this environment, anything, any lookout that says, oh man, we got great, everything looks good, but looking out, we're just not sure. You could pull back, but I don't think it's going to pull back for more than a couple of days unless it's a really bad outlook. 58, I don't think it goes under 57 and holds there unless it's just a really negative outlook. As it stands, if there wasn't any earnings report, I'd say fantastic. Don't even touch it. Put in a stop under yesterday's low on a little bit of your position of 57.08. Make a stop at 56.98 on a little bit. Otherwise, ride it and have a trading stop on the portion you would have taken off. Have like a 2-point trading stop and just let it go where it's going to go. Why? I've got a target on this for leg D. That wouldn't be D because it went to a lower low. But I have a target on this that says it should help. It should target by the summer of this year, within a couple of months, it should target the 68s, 69 actually. In fact, if it really gets going, it should go into the 70 area. It seems to be the right stock in the right area. That's all I can say. So now what would I do? If you were using options, I'd say, you know what, keep your full position, but why not buy? It's at 58.85. Buy a 57.50 put for tomorrow. Just it'll be inexpensive in the sense that you're not paying much of a premium, especially now. I can imagine it must be what I'm just guessing. Probably even if it's 75 cents, I suspect it's less than that. But let's just say it's a 57 off. It's probably about 42 cents. So what I'm saying to you is, within the context of, you know, these people that take your number, not your number, they try to match your number to be able to sell you something. That's like stealing. I don't like it. All right. So docu, I'm just saying if there wasn't earnings, I'd try to keep my full position and I'd buy an option for tomorrow. Right now, I the 1/3 or whatever it is that you would take off now because you've got a good gain and you don't want to lose it. I take a little bit off. I would have used a put option. So I'm just saying to you, the earnings come out. Let's just say you got a 4-point risk. That's all the way down to 54. Look, you are around when the earnings come out. Why don't you just get out of the position even if it's 4 points down and by tomorrow morning it's 4 points up, so that's 8 points you're giving away. That's all I can say. But at 58.85, if you aren't prepared to use options at all, make yourself comfortable and say, I've got a great gain. I'm taking off just a little bit. If there's a big drop, that little bit's going to sit there. I might want to rebuy it 4 points or 5 or 6 points down. I think it's going high. Seems to be the right stock in the right area, unless there's just some really bad news. Case closed. Okay, docu's done. Next question I'd like to go to just for the moment, just to say HYG. This is the junk area. This is what's called iShares, high yield corporate bonds. Just hasn't quite made a new leg to the upside over 85.87 on the 26th of February. It's the high today is 85.83, 6 cents off. This is just telling us that yields are actually moving up in the junk bond area. If you go to JNK, which is not, what is that, JWN, whatever that retail company is. If you go to JNK, it's the same pattern. I've got this one notated. It made a G/C. I just want to see something. Yes, I think 35.72, 35.70, 35.72. 3 Chapman wave reversal bars, and then it pulls back to the 34s. Now it's right back at 35.69 today, 3 cents off, 4 cents off, making a new high. This is exactly like that V-shaped formation. It could have go to a leg, seen the weekly. I think this is acting very well. I think this is telling us that, you know, I've been talking about the yields, and I said it looked to me earlier like the TNX, the 10-year was about to break out, then it just broke down completely. Now the TLT is down. This is I call this a very important phase. So I'm going to do 3 things here. One is the TLT at 121, if it starts to close underneath 120.45, close that is, for 2 out of 3 sessions, yields will start to move higher. If the TLT spikes to 122.75, that's going to say, nope, yields are coming down. And what I've said about yields for a little while now is that I think yields are just stuck in a range. I don't see them breaking upside or downside unless 25.54 in the 10-year, 2.554 is taken out on a closing basis in the weekly, but then you've got 25.26, just a little bit lower as the 200-period moving average key support. I just think yields, I'm not looking at yields right now, but I am going to say that the HGX, which is the Philadelphia Housing Sector Index, look, it has that same cup formation, which has got a little failed right shoulder there. I'm looking at that and I'm saying, you know what? That housing sector is holding okay, but it's really not breaking to the upside anymore. It had a fabulous run from the 229 area to the 292s, and now it's kind of stuck. Oh, this is an important phase. I'll be right back. Basil Chapman, Tiger Technicians out.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, here we go. So I'm looking at this, and the XLU, I want to put this into a package, and tomorrow in Technical Friday, I'll try to put it into some cogent form of numbers so that we can look at particular numbers and say if they break this, then such and such should happen. If they break down under this, such and such. But in the meantime, XLU is really important. XLU is at all-time highs. This is the S&P Select Utility Spider Fund in leg C in the weekly, in the monthly chart. Now, the question was, and the person who asked me about this yesterday and today, I've got this in the weekly chart as new, as old F, brand new B. In other words, leg F says, whoa, be careful, you're at this trend line resistance. Let me show you the same techniques I showed you in the 2-minute chart. The reason why I did that, these are the techniques I use all the time, use it in my trading, whatever I'm doing. Look at the cup formation, look at the Chapman wave inside wedge, and look at the wedge. It took you right perfectly to the resistance right at the old high of the 17th, the week of the 17th of November of last year at 57.23. You plummet down to the 47.37 level, February the 9th, the week of the 9th of this year, and look what you've done. You've of last year, and all this period, a year, you've gone up, pull back, up, pull back, had a very sharp peak E, an exact time matched right there, left side, right side with the Chapman wave inside wedge right there on the 14th of December at 57.18. You pull back to the 50.81 area on the 20th of December, and look. You've just broken out in, look, you had a tiny little peak A right there. The rest is just higher highs every week. Even the doji candle became a halfway marker. And now you're in that same, this is what I learned when I used to do my hand charting on engineer paper. I'd get the ruler out, my pencil, and I'd draw it, and the line would go up, but the price would stall. And like a year later, when I was joining all these engineering paper graphs together so that I could extend to the height or whatever it was, I'd say, hey, there's that trend line. Isn't that funny? Here I am way back 2 years ago and the price is here and that trend line is active. It hits it exactly. Why? If you're going up, if the tide is going up, you can use Fibonacci projections. You can use volume projections. You can use on-balance volume. You can use Chapman wave. You can use whatever techniques you want, Gartley's, butterflies. I don't care what it is. It's going to hit each upper level. If it's going higher, each resistance point, it hits it and then breaks it because it's going high if the tide continues higher. And if it's going down, you could use any technique you want. The big thing is to try your best to get the trend. And in this particular case, the trend is up for the XLU, the utilities. Now, why would the utilities be moving higher when the yields are kind of pulling back, but they're in a trading band, but they're really pulling back a little bit? Other things are happening. And that's what we've got to keep in mind. So it's right at resistance. The reason why I'm saying F/B, my eye says this should be a B. The MACD is strong on the weekly chart. The stochastics at 95%. That's fantastic. I'm volunteering that it's a B. I like to be a little conservative. I'm saying just be careful because if it's an F, you'll know because within 3 or 4 weeks, it'll be trading under 55 and you might have to make some kind of an assessment. In the meantime, there's nothing to think about. Everything's going higher. The daily, though, now is in leg D. And the MACD is still good, and the stochastic's flattening out at 96%. But on-balance volume says, be careful. It's getting a little bit toppy. You could have some kind of a pullback very soon. So that's what I'm saying. Want you to do that. Thank you. I hope that helps you in the den for that particular analysis. Next thing I had was, okay, now we need to look at the XAL because it's aerospace and defense. Still very weak, down 23 cents. It's gone from an all-time high back at 120. Did I not notate that? In the 124s back in February of last year, plummets down to the the 86 area. Yep. Week of the 28th of December has a fabulous rally to the 106s and now it's down back again into the 99 area. Watching this closely. Boeing right now, see, the thinking, I think, for a lot of people is that if Boeing has grounded their planes, let me have a drink of water. If Boeing has grounded their planes and Boeing's part of the Dow, that's a good thing because now there can't be any real bad news about some kind of a terrible accident again. No. I don't think it's quite as easy as that. Why? They haven't grounded the plane saying we were within about a week or so away of such and such and such, getting to know such and such. We don't know anything yet. Number one. Number two is if there was volatility in the Boeing flight just prior to the initial prior to the final descent, plunge to the ground, in a way that matches what we know from the previous flight that went down. And remember, Australia is still looking, evidently. They reactivated the search. It's out there somewhere between the islands. Well, that one was dipping and railing and dipping, and there was some talk about it. The nose kept being pushed down through an automated something or other. Well, if that is a very similar thing here, then they've got at least a sense of continuity. But let's just say there might be something slightly different. They might resolve one thing, but there's something else that you have to worry about. So this could have much greater implications. Number two is, what about all these airlines and all these flights? They have to change planes. That's going to impact them at some point. They don't have enough planes to take over all the ones that they have to take out of service. So this, I think, is going to have a repercussion. It could be a 1%, it could be a 0.5, it could be 0.1, it could be 2% of GDP. For all we know, if this goes on for 3 months, I don't know, I have no clue. So I'm just saying, I don't want to ignore this Boeing thing. And would I be buying Boeing here? I wouldn't buy Boeing unless you really have some positive news. Look at that leg D, Chapman wave stalk leg formation. That to me looks like a move that's going to take at least one more red candle in the monthly chart before you can have a decent rebound. So I'd be very careful. Oh, if you want to play, maybe do it with an option. But I don't think you want to put up 375 times whatever you're buying just to play 15 or 30 points or 50 points. You could do that in a stock much easier. Just be careful. Okay, out of that, IYT, just wanted to look at that because it was a question that came up. Same pattern. It looks exactly the same thing. Actually, isn't that interesting? The IYT doesn't have a very dissimilar pattern to the Boeing pattern. Time sequence is a little different. Just on daily, not the monthly. Monthly is completely different. All right, so much for that. Let's see. Oh, just a real quick thing. XRT. I want to see how the S&P retail is doing. Yep, this is the arch formation. This is the Chapman wave, lowercase h. Just be careful because if there's a close at 44.65 right now, down 71 cents. If there's a 2 out of 3 day close below 43.97, below 43.50, the XRT is going to take a lot longer to digest its gains. All right, that's out the way. Now we have some other questions that I want to get to. WMK, what is something? Weiss Markets, never seen it before. Ooh, this is a tough one. The 40.17, WMK, Weiss Markets, I'll look at it when I get back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So WMK's Weiss Markets, the question was, where would I start looking for an entry point? Not in it now, not interested, just waiting to see where it would go. So I looked at the monthly chart, and you'll see that the monthly chart is very interesting because it keeps holding this 200-period exponential moving average and treating it as a bounce-off area. And the only big question I would have had is I would have had this as probably a leg B until I saw the stochastic was failing, and then the MACD turned around. So it became a B/E/B minus, picking up the previous D. Why? Because it was just 2-3 cents above the previous peak trough that started the first leg A up way back in 2011, back in August or so, and it held. So that gives me a legitimate way of saying that I can put an inverted V shape here. So the big thing about this is it keeps making these arch formations that test the 200-period moving average, even if it's lower lows, but it holds it. This time, it's gone right through it. It went way through it back in 2017 to the 31 level, right up to about 57, 56. Now it's back down to 40 and under it again. So I'm just going to say, I don't know what they do, but this four smashing down red bars that go from a recovery high to a new low, recent low, 50-week low. I don't think I like it at all. I can imagine that it's going to bounce and then make another H pattern in the daily, and then it'll be ready. So I'm just going to say it's at 40.17. I believe between 39.20 and 37.50. That's kind of the area where I would start to look at it as a potential for the initial bounce. Let's see. So the bounce, 43 is the 43, 42 is the 14-period move. Sorry, the 9-period moving average, the pink line right here, because it's coming down. It's in pink. I'm just going to say I don't see anything here, but because we're looking at patterns that have just failed like this, let me show you something else. Wheat, that's wheat. The wheat chart has had a very nice candle today. That's what you want to see. You want to see maybe a little doji, sort of the brakes go on, the doji tries to hold and it fails. Doji tries to hold, fails, and then you get a really strong candle and just a really overlapping and engulfing type candle, and then you start to see a pattern. That's the pattern that I would like to see. And even this is maybe wheat has to come back from 457.5 right now after the low that was made in 428 and 427 round number just 4 days ago. This is the start. That's kind of what you want to see. This is just smashed in an arch formation to the low side without any recoveries. So treat this with respect. Don't overdo it. And when you get in, just nibble. Let it start. Let it make its way. Because if it's going to turn to the upside, you want a turn that takes it all the way back to something very important a very important series of peaks that were failing that now become resistance points that you want to overcome. And I just don't see anything until you get all the way up into the 51 area. So for the daily chart, it's a doji candle. It's at that 43.42, which is also the 9-period moving average. Have a little patience. Even if there's a bounce now, I would still wait for a secondary test. But keep it on your list, because Wise Markets, it has the potential always to, every year it has at least one pretty decent rally. Next question I had was, where did it go? Whoops. Wise Markets today reported record total sales of over 3.5 billion for the 52-week period ended December 28th, 2018, up 1.2% compared to the same period a year ago, while annual comparable sales increased 0.7%. Income from operations rose 7.2 million, or 9.4%. See, this is, and look, it's not even treating you with respect. It's minus 33. That's a start. That's Sunbury, Pennsylvania. Thank you, Jane the Deer. So that's, have patience. I think it's turning the corner. It could be very slow. The weekly says, turning what corner? You mean turning the corner down? Yes. But now it's trying to find some kind of support. Have patience. I think it'll be there. But I don't want the risk. Why? Because let's just say you bought it 4 days ago at 43. Well, now it's at 40. Let's just say you bought it 8 days ago at 46. Well, then it went to 43. Whoops, now it's 40. It hasn't stopped this descent. So keep it on your watch list. Good. Now I've got a question here for, where did it go? Oh my goodness. Did the Excel, you did that. Oh, I remember. Could I look at the XLI? XLI is the industrials now. Industrials, remember, this is a different pattern to the Dow, because the Dow is a very big mixer, really a perfect mix as far as I'm concerned. And that's doing much better than the XLI, the S&P Select Industrial Spider Fund. So I would say to you that if this candle in the next 2 weeks, if this big candle of the 11th, it goes from a low of 73.04 to a high of 74.93, and then squeaks a little high to 75.18, if there is a decline that goes halfway into this candle and starts to close underneath 73.75, I just say be a little careful. We need a little more time probably before it's going to go. But that weekly chart has improved a lot. I like it. I'm just saying that, yes, we're cautious right now. I haven't got any new stock buys at all. I do want to get some stock buys, but at the same time, I think that some of these things have just run away to the upside. And I just, gee, you know, it's tough to buy. Let me go to TTD. I haven't even looked at it for a few days. Look at this. The leg D starting to stall here, all-time high. Is this a G or a B in the weekly chart? I have to say it looks more like a B to me. And that is that an F or a brand new B in the monthly chart? Self-serve ads, the Trade Desk Inc. A-shares. When they came out, I said, this is a great company. We had it for a brief moment, didn't hold it. Yeah, tough to buy. Actually, no, I shouldn't say that. If you have a very long-term outlook and it's part of your portfolio, it's part of the way you plan your portfolio, buying it here at 209, if you're looking at a stock that's going to go to 235 over the next 3-4 months, you know, 8-9% on a stock like this, that's really good. I'm just a little concerned that this particular pattern, when you break out in this Chapman Wave falling axe, when it actually does at least a 1-to-1 to the upside, which is kind of what it's done, it sometimes can do a 1-to-3 to the upside. But if it starts to pull back, it can go right back into the middle. Well, 209 to 193, 10 points. So that's almost like, wait, I've got about as much on the upside as the downside risk at this particular. I just couldn't do it. I couldn't do it for subscribers. In a long-term portfolio, I personally would say, you know what? I'd actually start a little nibble. Yeah, it's a fantastic stock. If anything's going to move, this has to be the one that moves. MACD and stochastic in the weekly are just looking great. But it would be part of an overall portfolio. And I'd only do it if I had enough comfortability in stocks that have gone up and percentage gain that says, you know what? You could take a 10 or a 15% risk here, because this could be one of the big winners, if there is another big mega move in the Dow at some point, then you're talking about this becomes a favorite of all the fund managers, and it could have a 50% gain at some point. So that's different thinking. Shorter term, I'm saying be a little careful, but look at this. It's an amazing chart pattern. Straight up from the 100 level to 208 in just 2.5 months. Fantastic. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, Steve comes up, then Dave White, then Tom O'Brien. I'll be back with Tom a little later on today. And just really briefly, I had a quick question here. BSM in the den. BSM is Blackstone Minerals LP. BSM trading at 17.53, up 10 cents. BSM fortune. Okay, but this is, you know what? I think this is starting to improve. I would 1753. I probably would wait for 17. If 1730 gets taken out, I don't want it just yet. But if it doesn't break in the next 2 days, if it doesn't go underneath 17.38, if it doesn't go below 1738 and it just nominally makes a slightly new high, I'd say, you know what? In your case, because you're looking out longer term. No, I'm holding off. BSM, hold off. We'll do it again, maybe Monday. So SMHs, the question was, are you not doing your shorts anymore? Yes, we took profits in the shorts, not much. We took some, I must take that off because we're not there anymore. We did take profits in all our shorts position, not as much as we had for those who took, as I wanted you to do on Friday, to take something off. Oh, it was a Monday. We got a 10% gain in most of them on the shorter position. But no, we're out now. But I'm short once again, just because I do believe a particular index, only because I'm looking at this. I'm saying this, we just got some short-term digestive action going on, I believe. So I just want to briefly talk about Renee Fleming, the wonderful soprano. She's singing with the Boston Symphony Orchestra this weekend, tomorrow and Saturday, and I think Tuesday. So I went to a master class with New England Conservatory of Music. That's where I got my master's degree. Boston University College of Fine Arts School of Music, a joint masterclass program. She was fantastic. And I'm slowly putting together my thoughts from that masterclass with these fabulous singers who started off kind of tentative. They were wonderful techniques, but they just didn't put the music together. And then as she was talking and explaining things to them, just the light came on, and she talked about the focal point and pushing the air through. That's what we look at in stocks, and I'm going to try to put it together for Technical Friday tomorrow. And so if you can see Renee Fleming this weekend with the BSO, take that opportunity. She is amazing. Just as we're going out, what was I going to do? Yeah, watch out if the Dow closes down 30 or 40 points today. I think we've got a couple of days here of some digestive phase. Have a wonderful week. I'll see you back a little later with Tom O'Brien. Stay tuned for Steve, Dave, and Tom. Have a great day.